everyone. I'm David Darst here to give you a recap of the month of April, and there was certainly a lot of developments. As you know, primarily the words of ceasefire, words of negotiation, words of occasional armed conflict were driving oil prices, and then oil prices turn around and drive inflation and inflation expectation. That turns around and drives interest rates, and that, of course, causes the stock market and the bond market and the currency market and gold to move. So that's what we had. A lot of flow of news, developments there during the month of April. We also had further confirmation of a theme we've mentioned before, which is the run-hot economy. The economy is basically moving along at a decent clip. It's moving along. However, price pressures are basically up there. They're elevated. You had the Philly Fed and the Empire State Manufacturing. Both of those are regional surveys, and they're survey-based. They're not hard data, but the Philly Fed was 26.7 for April versus 18 for March. The Empire State Manufacturing was 11 for April versus negative 0.2 for March. So you see this big lift in economic activity, manufacturing activity. However, prices, the prices paid in the Philly Fed was 59 versus 44 back in March. So you see prices coming up. The prices for inputs on the Empire State, 51 versus 36.6 in the previous month. Then we've had the durable goods orders, and what we track, as you know, is the core durable goods, which is non-defense capital goods ex-aircraft. So you take out the planes and so forth. For March, it was up 3.3% over the month. That's basically February was revised upward from 0.6% to 1.6%. So you see that companies are moving along, spending money. The Michigan sentiment inflation expectations for 1 year, 4.7% versus 3.7% back in March. So April for the 5 to 10 year, 3.5% for the 5 to 10 year inflation outlook versus 3.2% back in March. The GDP, as you know, the third quarter was 4.4% of the U.S. The fourth quarter was 0.5%. The first read that we got just at the last week of April, the first reading that we got for the first quarter is 2.0%. So again, the economy's clicking along right now. March retail sales up 1.7% in the month. Of course, gasoline prices were up 15%, so that boosted somewhat the overall number. But the control group was 0.7% for March versus 0.6% for February, and that was revised upward. Now, we had monetary policy at the very end of the month. The Federal Open Market Committee meeting met, and by the way, it looks like Kevin Warsh is now going to be confirmed. They've moved his candidacy right along. Expect to vote on it early in the month of May. But at the last meeting of the FOMC, Federal Open Market Committee meeting, you had it vote 8-4 to keep rates as they are with 4 dissents. That's a large number of dissents. I think you've got to go back about 30 years to get that kind of number. But they're going to keep monetary policy at 350 to 375. Jay Powell has announced he will stay on, and he will take the expiring seat of Stephen Miron, and he will stay on the Fed. So that basically, I think you can expect changes. I think things are not going to be the same as they were in the monetary policy part of the financial markets. The next meeting is June 17th, so you've got a long distance between now and June 17th. I think it's about 47 days. 95% chance right now of no change from the current rate of 350 to 375. If you go all the way out to the December 9th meeting, that's the last meeting of this year, December 8th, December 9th, right now it's still 76% chance of no change. Again, that's as of now. So when you put all this together, the 2-year Treasury rose by 9 basis points during the month to close. at 388. It's up 41 basis points. Again, those run hot economy, inflation, and economic activity. It's up 41 basis points versus 347 at the end of last year. The 10-year, which is also an indication of the economic activity and inflation outlook as opposed to the 2-year, which is really more on monetary policy. The 10-year rose 10 basis points during the month to 440. It's now up 22 basis points versus 418 at the end of last year. The S&P 500 during the month was up 10%. It's now up 5% for the year during the month of April. NASDAQ was up 15%. And you have some of these magnificent sevens. NVIDIA was up 14%. Microsoft was up 10%. Meta was up 7%. Google was up almost 34%. Amazon was up almost 27%. So that's NASDAQ is now up 7% for the year and 15% for the month. Russell 2000, again, this broadening out. It was up 12.2% for the month. It's up 12.8% year to date. Gold, of course, interest rates up, gold down. Gold was down 0.7%. It's up 6.7% year to date at $4,614 per troy ounce. Oil was up 3.6%. It closed, this is the West Texas Intermediate, 105.07. Brent even higher. And 83% up thus far this year. Volatility. People were very worried at the end of last month, March 31st. The VIX index was 25. It closed at 16.89. It was down 8 points or 33% during the month. Our view right now is it was smart to not bail out in terms of securities. We basically continue our focus on a 60% equities, 20% liquidity and cash, and maybe some fixed interest securities, and 20% alternatives. There you're talking private equity, private credit, private real estate. We wish everyone a great month ahead. Thank you for being with us, and all the best to everyone.